Wednesday morning. Top Gun Options traders and investors. Matt Buckley, call sign Whiz, the primary model portfolio manager here at Top Gun Options. And my apologies for not getting out a sit rep yesterday, but we were a little busy here at TGO. We had 3 live trading sessions yesterday. Well, we had our normal primary live trade brief from 9 to 11 yesterday morning. Put on some great bearish trades on Apple. Bear call spread out to December, and also a bearish double vertical on Apple that both are already doing well. And also added a Facebook double vertical out to, I believe it was January. So, and then obviously had close to 500, 600 traders in 2 live trading sessions that we opened up to the public just to show what we do here at Top Gun Options, and had an absolute blast and got a nice a slew of new traders here at Top Gun Options who are sick of being the hunted and going to turn around and be the hunter. So what's going on here, and what happened yesterday as well? Let's cover yesterday real quick since I didn't knock out a sit rep. Folks, the biggest news yesterday was the circus, and that's being polite, over in Europe as they discuss Greece. Greece is looking at, when they released their budget 2 weeks ago, about 187% debt to GDP. And these folks are now teeth gnashing about 2020. I don't even know if Greece is going to still be around by 2020, but now they're saying, try and reduce debt to GDP of 120% by 2020. It's just, they're rearranging deck chairs on the Titanic, folks. The math just simply does not work. Unless they slash interest rates in half, unless they slash the debt owed that Greece owes the rest of the folks, mainly Germany, in half, it's physically impossible. So it literally, at one of the press conferences yesterday, Christine Lagarde, the head of the IMF over there, at one point got into a little bit with one of the German guys, president of the Euro, one of the, we got the ECB, the ESB, we got the IMF, we have all this stuff, all these cast of characters running around, but she more or less said, hey, this guy just tacked on 2 years out of the blue, like, we'll give him till 2022, and she's like, what, excuse me, it's 2020, and she kind of rolled his eyes at the guy, and later that guy had to actually say to reporters who were laughing, like, hey, I'm not joking. So even if it weren't so sad, it would be hysterical, but it's sad. The Grexit's going to happen. Greece is going to exit the Eurozone. It's just a matter of when and under what circumstances. Is it a orderly exit where they say, you know what, our apologies, we got to split for a little bit to get our house in order. We'd like to pay you all back someday. Or are they just going to say, it's time for another round of Ouzo shots, and Europe, you can pound sand. Sorry, you're not going to see a nickel get paid back. That has dire consequences for markets around the world, for Spain, and everything else. So it really is a circus over there, and it's going to impact, is going to impact our markets going forward. We had a massive sell-off last week on Draghi's comments about Germany starting to catch a cold. When the banker of Europe starts to catch a cold and starts seeing some poor economic numbers, look out. Right? Look out below. So that's essentially what happened overseas, and that's really underpinning the market. Also underpinning at least U.S. equities market, obviously, is the fiscal cliff. The big elephant in the room, and a magnanimous and victory Obama is now announcing that, you know what, I'm demanding $1.6 trillion in tax hikes over the next 10 years. That's double what he asked for before. But didn't you see unless you were in a cave last week, he got a mandate. Ask the guy. I got a mandate last week to raise taxes. Apparently he skipped math at Harvard, but essentially a 50-50, a divided nation is not a mandate. But so we're screwed. Businesses are starting to lay off in droves, and it's going to be ugly. So be careful what you wish for, folks, because this is about to get really ugly. Home Depot yesterday actually reported some good numbers, and Cisco, surprisingly, John Chambers over at Cisco, his ship's starting to sail in a good direction there. So Cisco's looking good, but pre-market, folks. Here's a trade. I'm getting ready to put a trade alert together for my traders here at Top Gun Options and blast that out to them via text alert and email and also a video. Is retail sales. You ready? Retail sales just came out, and they're not good. So core retail sales, what's the difference between core retail sales and retail sales? Well, core retail sales is everything. All items at the retail level, X autos, okay? Well, retail sales, just plain old retail sales, is the change in total value of everything at the retail level. So one's, X autos, one's and one's all retail sales. But whether it's X autos or not, red bad, Mongo think red bad. So red bad. And previously, retail sales, let's go core. Core retail sales came in at 1.2, and that was revised up in September from 1.1%. The forecast was a tepid 0.2% increase in retail sales, came in flat. Retail sales as a group came in actually less, so not good in the retail sector. Okay, PPI, taking a look at potential inflation indicators, down 0.2%. And a year-over-year increase of actually 0.2%, so lower than expected, and essentially unchanged from September. So why do I bring up retail sales? Well, here's why. Because I'm getting ready to send out a extremely bearish trade on this company. A&F, Abercrombie and Fitch. Look at this pre-market. They crushed it. Okay, so and they're hopeful to sustain year-over-year earnings per share growth, blah, blah, blah. I'm selling the hell out of Abercrombie at the open. Maybe probably around 10 o'clock, though, to let the first half an hour settle down and see how much of a pop it gets. Look at this. The implied volatility is a 63 versus a historical of a 35. When vol is expensive, you sell it. When it's cheap, you buy it. Couple A&F knocking the doors off of it with poor retail sales. And, oh, by the way, this little event that happened in the Northeast where there's a whole lot of blue on the map got leveled by Sandy. If you think people who are in New Jersey, New York, Long Island, still without power, it's criminal. Here we are. We can put a man. I was watching on the Military Channel last night, the Apollo series, and just watching how we put folks on the moon and Apollo 13 and how the ingenuity and everything going on. This was in the 60s. The computers that powered the Apollo program had less computing power than the iPhone 5. And here we are. We came to get power to folks in New York. But I digress. Why do I bring this up? I don't think people in New York, New Jersey, Philly, or some of the hardest hit regions are going to run out to buy a skin-tight Abercrombie and Fitch sweater for Christmas. Retail sales numbers are coming in disappointing. Companies are laying off in droves. Welcome to America, spelled with a K. Okay, so I'm selling the hell out of Abercrombie at the open, or like I said, about 10 o'clock into the open, because it doesn't make any sense for Abercrombie to pop this high. I don't care what they said and what their forecast is. With a fiscal cliff, with people getting laid off of companies or their hours reduced, companies are racing franchisees. Papa John's been taking a lot of heat, right? Well, guess what? They're franchisees, and they're trying to get under the having more than 50 employees. A lot of these franchises. So they and lowering people below 30 hours, so they're not employees. I saw a stat the other day. Obama's releases 6,000 pages a day of new regulations. Businesses find a way, not find a way to succeed, because under this repressive regime, it's sometimes hard to succeed. But they find a way around stuff. So. Trust me, I'm a strategic consultant to companies around the world, here in the United States, heading up tomorrow to St. Louis to speak to the YPO organization in St. Louis, Young Presidents Organization. They're not that stupid. So where there's a will to make money, there's a way, and it's going to be on the backs of employees. Might sound like Gordon Gekko, but guess what, folks? That's the way it works. Businesses are not charities. Businesses are not the United Way or the Red Cross. Allegedly nonprofit. Don't get me started on the Red Cross and their, quote, nonprofit status and how much they pay their folks and everything like that. But businesses are not charities. They're here to make a profit, and they have a fiduciary duty to their shareholders. I, as a businessman, have a fiduciary duty to my wife and my 3 children to provide for them. It's not to provide jobs. Sorry. if I see a resolution to the fiscal cliff. I have a lot of trades in our model portfolio that are bearish up until December because I think we're going to see a lot of teeth gnashing and hand wringing and competing press conferences and stuff like that. So vol will increase, the market will sell off, and then massive tax selling is going to occur in December. Because why? Because capital gains rates are going up. Taxes on dividends are going to go up. A great article on CNBC.com yesterday about how the rich, and you know what? I can't even define who the rich are anymore. Another good article. And the U.S. budget deficit jumped 22% in October. Who cares about apathy? There you go. Wealthy dump assets in advance of cliff. So December is going to be ugly, folks. December is going to be extremely ugly as people dump equities, but I'm going to get bullish for January and February. Taking a look at a chart of the SPX for the past 3 years, you can't help but be bullish. And I covered all this yesterday in my live trade brief. So if you didn't make it, my apologies. If you couldn't make it and you missed a really good time of seeing underneath the hood here at Top Gun Options, how we think strategically about the markets from China to the Middle East to Greece to operationally here in the United States, and then all the way down to tactically, what we need to do tactically to potentially profit. And we, like I said, we had a great day yesterday. This Facebook trade I put on, very bearish position on Facebook. It's up $1,500, about 333% in a couple weeks here, and added another one yesterday as well. Like I said, a bunch of Apple positions that are looking pretty good. A bullish trade on SDS, a double vertical spread I put on Thursday or Friday. It's up $730. Bullish on SDS is bearish on the market. Right, SDS is the ProShares Ultra Short S&P 500. So, taking a look at the chart here, you don't have to be a rocket surgeon to figure out that something's going on with SDS. That means, in my opinion, the markets we're really poised for a pullback. I'm going to call it a relief pullback because on, that's one day. Because with the sugar high of quantitative easing starting to leave, well, you can see what we talked about yesterday. The SDS has really bottomed out here at around 53, 52. And each one of these up arrows is where I put on a bullish trade on SDS, which was bearish on the market. And these double verticals have been absolutely crushing it. So having a great time. Like I said, getting ready to put out a bearish trade on Abercrombie and Fitch. Great numbers out of them. Sold. Retail sales falling out of bed. Sandy is not going to be a Merry Christmas for the Northeast. I do not see retailers doing well. And added two, like I said, very bearish positions on Apple yesterday because Apple, look out below. When Apple hit 702, we were in a live trade brief, and I said sold. Analysts were coming out with Apple 850, Apple 1,000. I said sold. Apple's going to see 600 before it goes any higher. I was wrong, because Apple's seen 550 and below. So I was right on the direction, and I thought 600 would be a big order of magnitude. I was wrong, and it's still got more room to fall. Okay, I got a lot of stuff to do before the market opens here. Take care of my Top Gun Options traders. I show them how I manage a model portfolio of $100,000, and like I say, people lie, numbers don't. Since I took over the model portfolio on March 1st of this year with about $50,000 in model portfolio money here on our Trade Monster paper trading platform, we're up nearly 300%, just shy of 300% in model portfolio profits. It's a $100,000 model portfolio, but at any one time, on average, I use anywhere between 45, 55, sometimes 60, sometimes 40 in capital. So a nice 50 grand is a good ballpark estimate there. But there you go. Starting with 50 grand in model portfolio haircut, and we're up to 142 grand. So that puts a smile on my face. Having a great time here at Top Gun Options. Wish you guys were too. We're not the hunted here at Top Gun Options. We're the hunters, and we're having a blast. So happy hunting. Make sure you hedge. I'll be back with tomorrow's sit rep. I was going to say Friday market wrap up, but get my days confused. All right. We'll see you, folks.